Please visit tradingsim.com to simulate this trading lesson. Hey day traders, this is Al Hill from tradingsim.com. Alright, so today we're going to be talking about a basic day trading strategy, but it is a bit risky. Look for a stock that's down approximately 5, 6, 7%, and what you want to do, you want to wait until the first bar closes, and then you want to take a short position after a break of that low, and then put your stop above the high of that bar. So for example here, let's fast forward a little bit. This is RIM from June 25th. Alright, so you have here 54, looks like 30, 54.30 is the low. So we're going to put an activation price of 54.28 or something. The limit price of 54.25. And we can do, let's say, 2,000 shares. Sell short. Alright, so what you want to see here is if it breaks this low, right, you want to take a short position. So basically all we're doing here is you look at a stock, right, that's down anywhere 5, 6, 7% minimum, high volume, which we have here, volatile issue, which we have here in RIM. It's been in a nice trading range or some sort of sideways action, so you know there's a lot of bent up energy in this move. It's not just a break that's going to quickly reverse on you. So should have probably said that earlier, but you want to see a clear consolidation range, nice horizontal, right? On a point and figure chart, it would just look beautiful, right? I mean, just have X's and O's going left to right, and you want to take a short position on the break of the first candle. Again, you want to see a candle that's strong, right? You don't want to see a little weak candle. You want to see a candle that's strong and going in the direction of the trend of the gap, and you also want to see high volume on that candle. So let's fast forward here a little bit. All right, so with commissions, our average price was 54.26. We're short 2,000 shares. Now, what you want to do here, now that you're in, right, you don't want to just sit out there and you just, okay, just leave it up to the wind. You want to put your stop market order in. So you want to put your stop slightly above the high of the opening candlestick. So in this example, we'll put it around 55.21 to get over the next 10-cent increment and see if that cannot hold the stock here. Alright, so now we have our stop market order. So you can clearly see we're playing this first candle. I mean, this is a very basic strategy, right? 5 to 7% down. You don't want to go 10, 15, 20% because a lot of times those go flat or they're so volatile that you can't make sense of it and they will halt trading and you'll be on the wrong side of the move. But you want to have high volume stocks going in a direction after a nice long horizontal kind of trend, right? So there's a lot of bent up supply and demand in here, and apparently there's more supply in this one because the stock's going down. And so that's it. You're in. You have to set up your own targets for how you want to get out. Of course, this is strictly informational and educational. You have to set up your own targets of how you would get out of this position. That's based on your own risk parameters and capital you have. But in this example, we'll just let it play out, just fast forward out through the end of the day. Notice here, like once you break 53, right? I mean, so this is a whole number here, and if you notice that, you know, RIM kind of struggled in here, kind of trying to find itself, and then it slowly gave it up. And once it gave it up, you know, we hit this whole number at 53, came through it. So you know your next level down is probably going to be around 52 even. So here you have, you know, your plus 2,500 bucks, give or take a little, right? You just played one candle, you know, just made $2,500, $2,000, whatever, and you just played the first candle. You know, so odds are here this is just going to go down to the 52 range. So, you know, it's getting later in the day, so you can either take the money now, right? Or you can just put a stop up here. You constantly want to move your stops, right? You don't want to just give it all back. But just for this example, you know, we can just exit out here. You're at lows of the day. You're up close to $3 grand. So just get out of this position. I'll slow this down a little so we can get out. Let's go over, close out our stop market order. Let's come back over here and let's get out of these shares. Let's buy the cover. Out. Over $3,000 made. Just trading one candle and just letting it play all day. Alright, good luck trading.